Welcome to this video in which we'll examine the US's top secret survival tactic during economic downturns. It's critical to comprehend how nations can weather the storm and come out stronger during economic turbulence. With the current global economic climate and the ongoing effects of the COVID-19 pandemic, understanding the US's approach to surviving a recession is more critical than ever before. The United States boasts a long history of prosperity, but it's also encountered its fair share of financial setbacks. From the Great Depression of the 1930s to the Great Recession of 2008, the US has encountered numerous challenges, and every time it's come out more resilient. The ability of the US to innovate and adjust to evolving economic conditions has been a crucial factor in its success. In this presentation, we'll examine how the US strategy for enduring a recession has progressed over time and how it has persistently conquered economic hurdles. Hence, whether you're an entrepreneur seeking to establish a business during an economic decline or an individual aiming to safeguard your finances, this presentation will furnish you with valuable perspectives on how the US has skillfully navigated past financial setbacks and what it's doing to equip itself for future difficulties. Let's plunge straight in and uncover the USA's covert weapon for surviving a recession. What's a recession? Before we discuss the secret US weapon to survive a recession, let's first understand what a recession is. A recession is a period of economic decline characterized by a decrease in GDP, employment, and income. This is typically caused by a decline in economic activity, which in turn leads to reduced demand, falling prices, and increased unemployment. Recession can also have a significant impact on financial markets as stock prices decline and investors shift their investments to safer assets such as bonds. While recessions are a natural part of the economic cycle, they can be challenging for individuals and businesses, especially those that are heavily dependent on a strong economy. In the next section, we'll explore how the US economy typically performs during a recession. How does the US economy perform during a recession? The US economy has experienced several recessions over the past century, including the Great Depression of the 1930s and the more recent Great Recession of 2008. Despite these economic downturns, the US economy has consistently bounced back, thanks to its robust economic policies and the government's efforts to stimulate the economy. During a recession, the US economy typically experiences a decline in economic growth, employment, and consumer spending. Industries such as construction, manufacturing, and retail are particularly vulnerable during a recession as consumers cut back on spending and businesses reduce their investment and hiring. However, other sectors such as healthcare and education are generally more resilient during a recession, as these services are considered essential and demand for them remains relatively stable. While the impact of a recession can be significant, it's important to remember that they are a natural part of the economic cycle. By implementing effective economic policies and taking action to minimize the impact of a recession on individuals and businesses, the US economy can continue to recover and thrive in the long run. What are the secret weapons to survive a recession? Number 1. Diversification. Diversification is like having a safety net for your finances. Imagine you're walking across a tight rope and the only thing that you have to rely on is the rope itself. If the rope breaks, you fall. But what if you had a safety net underneath? That's diversification. When it comes to investing, diversification means spreading your money across different types of investments, such as stocks, bonds, and alternative investments like real estate or commodities. This helps to protect your portfolio from the ups and downs of any one particular investment. For example, if the stock market experiences a downturn, your bonds or real estate investments might be doing well, offsetting your losses. But diversification isn't just about investing in different types of assets, it's also about investing in different companies and industries. This can help protect you from the risks of any one particular company or industry. For example, if you only invest in tech companies and the tech industry experiences a downturn, your portfolio will likely suffer. But if you also invest in other industries like healthcare or energy, you have a better chance of weathering the storm. Another benefit of diversification is that it can help you stay invested for a long time. When you're not overly invested in any one particular asset or industry, you're less likely to make rash decisions based on short-term market fluctuations. Instead, you can stay the course and stick to your long-term investment plan. Overall, diversification is an effective strategy to survive a recession. By investing in a mix of traditional and alternative investments and spreading your money across different companies and industries, you can protect your portfolio from the ups and downs of any one particular investment. Number 2, savings. Saving money is like building a fortress around your finances. You never know when you might need that extra layer of protection, especially during a recession. That's why building an emergency fund is critical to surviving tough times. An emergency fund is a pool of money that you set aside to cover unexpected expenses, such as car repairs, medical bills, or even a job loss. Ideally, your emergency fund should be able to cover at least 3 to 6 months of living expenses. That way, if you do experience a sudden loss of income, you have a financial safety net to fall back on. Having an emergency fund can also help alleviate some of the stress associated with financial uncertainty. When you know that you have some money set aside for a rainy day, you can sleep a little easier at night. It gives you the peace of mind to know that you can handle whatever comes your way. But building an emergency fund takes time and discipline. It's not something that happens overnight. You have to be intentional about saving money and make it a priority in your budget. One strategy is to automate your savings by setting up a direct deposit from your paycheck to a separate savings account. That way, you don't have to think about it. The money is automatically set aside before you even have a chance to spend it. Overall, building an emergency fund is a critical aspect of surviving a recession. By having a financial safety net, you can alleviate some of the stress associated with sudden loss of income or unexpected expenses. And by saving money before a recession hits, you're taking a proactive step towards protecting your finances. Number 3, debt reduction. Debt can feel like a heavy weight on your shoulders, especially during a recession. That's why reducing debt is a critical strategy to surviving tough economic times. By reducing your debt burden before a recession hits, you can alleviate some of the financial stress associated with a decline in income. During a recession, it's not uncommon for individuals to experience a sudden loss of income or a job loss. In these situations, high levels of debt can make it even more challenging to make ends meet. By reducing your debt load, you free up more money to save, invest, or spend during a recession. There are several strategies for reducing debt, including paying off high-interest debt first, consolidating debt into a lower interest rate loan, or negotiating with creditors for lower interest rates or payment plans. It's important to prioritize paying off debt before a recession hits, as it can be more challenging to do so during tough economic times. One benefit of reducing debt is that it can also improve your credit score. Having a good credit score can make it easier to access credit during a recession, such as a low interest rate loan or a credit card. This can be helpful in emergencies or unexpected expenses. Overall, reducing debt is a critical strategy to surviving a recession. By lowering your debt burden, you can free up more money to save, invest, or spend during tough economic times. And by prioritizing debt reduction before a recession hits, you're taking a proactive step towards protecting your finances. Number 4, skill acquisition. Skill acquisition is a strategy that's often overlooked when it comes to surviving a recession, but it can be a game changer. During a recession, the job market can be highly competitive, making it more challenging to find work. By focusing on acquiring new skills and knowledge, individuals can increase their chances of finding employment and even starting their own businesses. Learning new skills or improving existing ones can also lead to career advancement opportunities, higher salaries, and better job security. This can be particularly important during a recession when companies may be cutting back on hiring and layoffs are more common. There are many ways to acquire new skills, including taking courses or certification programs, attending conferences and workshops, volunteering, or even seeking out mentorship opportunities. The key is to focus on developing skills that are in demand in the job market, such as digital marketing, data analysis, or project management. In addition to improving job prospects, skill acquisition can also lead to personal growth and fulfillment. Learning new things can be challenging and rewarding and can provide a sense of purpose and accomplishment during tough economic times. One example of skill acquisition that has become increasingly popular in recent years is entrepreneurship. Starting your own business can be a way to create a new income stream and take control of your financial future. However, it's important to note that entrepreneurship comes with its own set of risks and challenges and requires a significant amount of dedication and hard work. In summary, skill acquisition is a powerful strategy for surviving a recession. By focusing on developing new skills and knowledge, individuals can increase their job prospects, improve their earning potential, and even create their own businesses. And in addition to the practical benefits, skill acquisition can also lead to personal growth and fulfillment. In conclusion, the US has a secret weapon to survive a recession, and that weapon is the ability to innovate and adapt to changing economic conditions. Through government intervention, financial market development, and entrepreneurship, the US has consistently bounced back from economic downturns, proving its resilience time and time again. While no one can predict when the next recession will occur, understanding the US's strengths and secret weapon can help us better prepare for whatever economic challenges may come our way. Thank you for watching this video on the US's secret weapon to survive a recession. If you found this video helpful, please give it a thumbs up and consider subscribing to our channel for more informative content. Don't forget to hit the notification bell to stay up to date on all of our latest videos. See you in the next one.